Hi, welcome to our webinar on U.S. taxation of foreign trusts boot camp. And thank you for joining us today. I just want to go through, my name is Milan Solarz-Patel. I have Amy Jetel with us, and I just want to go through a couple of preliminary things before we get into the actual presentation. These are important, but administrative. So first thing for everyone to know is that this is a live recorded session. We will be making the recording available next week, but if you are, for privacy reasons, if you wish to keep your video off, we understand and certainly do so, as well as if you want to put your mic on mute, you can do that. At the end of the presentation, we will have an open question and answer. So we ask that you hold all your questions until we finish through the presentation. We certainly hope you have some questions because we love questions. Amy and I love to talk about this stuff. So if you have any type of question, please feel free to ask us either through the mic, or if you want to stay more anonymous, you can send us through chat, and that way you can ask whatever you want, and if appropriate, we will respond. The last, well, the other part here is we do have a privacy policy. So someone is saying they can't hear me as the speaker. Is everyone else able to hear me? Amy, can you take your mic off? Can you hear me?
Maybe that's because I had myself muted.
Okay. Can you hear us now?
I can hear you.
Thank you. Maybe I'll just do a quick summary since maybe some people didn't hear. So I just wanted to emphasize this is a recorded session. We'll be sharing it with you next week once our IT guy Joe's back. He's traveling right now. We're going to have an open Q&A at the end of the presentation. We strongly encourage you to ask any questions. If you wish not to do so while live and by camera, you can submit it via the chat, and we, if appropriate, will answer. We do have a privacy policy, so again, if you want to turn off your video and mic, please do so. And just the last point here is that a disclaimer: this presentation is for informational and discussion purposes only. There is nothing here that should be construed as legal or tax advice. Right, Amy?
Yes.
With that, I want to introduce you to Amy. Amy is a U.S.-based attorney. She focuses on cross-border taxation like myself. Her emphasis is on the legal advisory side. She has done a considerable amount of writing. She's been quoted in the Wall Street Journal, and she's a STEP board member, and she's also part of the prestigious ACTEC Fellow, which is the American College of Trust and Estate Counsel. And it is actually a very prestigious little organization that Amy belongs to. So it's a little exclusive club. So anyway, we're very thrilled to have Amy here. She's got a tremendous amount of experience, and so I'm very thankful for you to be here presenting with us. Just by my way of background, while Amy was earning all these accolades and memberships in these exclusive clubs, I was actually in Switzerland on the front lines dealing with voluntary disclosures, and also had a lot. Basically, my entire life has been in the foreign trust space. So while most U.S. practitioners deal with domestic trusts, I was more familiar and have always dealt with foreign trusts. So I'm happy to be here as well, and looking forward to hopefully having a nice presentation and that is helpful to all of you. So I'm going to, in a second, hand it over to you, Amy. I just want to introduce your topic, which is, so we've broken this down into 3 components. Today's component is classification of trusts. And why that's important is because all the other analysis, the legal analysis, the tax analysis, and even the reporting, all stems from how the trust is actually classified. So while it's not the most exciting topic, it's actually the most fundamental important. So I don't want to actually take away all of Amy's thunder here. So I'm going to pass it off to Amy and you can begin.
All right. Thank you. Yeah, so like Milan said, the starting point is what kind of trust do you have? Because from that stems all of the other analysis and consequences. So what do I want to say about this? Well, the starting point is, we are all, like I'm a U.S. common law lawyer. And so, and I tend to think, well, if something calls itself a trust, then it must be a trust, but the federal tax laws, they go to the substance of what an arrangement is. So there is a principle of federal tax law which says that federal tax law does not create property interests. It only taxes the interests as they are classified under state or local law. And that includes even, foreign law. So you have to kind of look at what the thing is under the governing law to then determine whether it's a trust and what type of trust it is. So the first question is, do you even have a trust? So, in my career, I've come across things that call themselves trusts or don't call themselves trusts. And they're not trusts. They may be corporations or partnerships, and things that don't call themselves trusts, and they are trusts. So, and I think Milan will have a couple of examples there. So this is why there's no definition of a trust in U.S. tax law, because U.S. tax law doesn't create those concepts. Let's skip to the next slide because I don't want to get too in the weeds.
Yeah, so I just wanted to say one point there, Amy. Like, I think the non-technical description would be if it walks like a duck, if it talks like a duck, then it is a duck. That's kind of how I would describe the non-technical way of saying what's a trust.
Yes, and we're in sync because that is the phrase that I use. If it walks like a trust and talks like a trust, then it's a trust. If not, then we got to figure out what it is. So,
but don't go by the labels alone.
Right. So, I would say go to the next slide. Oh, you're already there.
Yep.
Sorry. Okay. So let's start with the Internal Revenue Code regulations are and rulings and all of that are going to look to the substance, these three primary things, if it's going to call it a trust. So, the first thing is, does the trustee have a fiduciary duty? Meaning that they have to put the beneficiary's interests ahead of their own and act in the best, interests of the beneficiaries. All of that. Does the legal title holder of the asset have a fiduciary duty towards the beneficiaries? Next is the trustee, as the actual legal owner of the trust assets, do they actually have management responsibility, full management responsibility? Because, as you know, like a trust arrangement under the common law is actually the severance of title to an asset. There's beneficial title and legal title. So when someone creates a trust, they put the legal title in the hands of the trustee, and the beneficiaries only have beneficial title. So the trustee's got all the work, responsibility, liabilities, obligations of managing the property. The beneficiaries just sit around and they get to potentially have the fun of beneficial ownership of the property. So does the trustee have actual management control and a fiduciary duty to manage those assets in the best interest of the beneficiary? And do the beneficiaries just sit around and with their hand out and hope that maybe they will receive the benefits of the trust. So in a nutshell, that's what a trust is going to look like. So let's look at some non-U.S. arrangements that may or may not be trusts. So I'm going to start with the fideicomiso, spelled this weird way. Spell check hates it every time I type it in, which is really basically a Mexican land trust. And some of you may actually be familiar with the Illinois land trust ruling. So it's a similar type of arrangement. So back in 2012, I had somehow gotten into this heated debate with a whole bunch of people on listservs about this arrangement that U.S. people, if a non-Mexican person buys property basically in the borderlands of Mexico, non-Mexicans are not allowed to own that property. It's for national security reasons. But where's all the property that all the non-Mexicans want to own? Well, it's in Cabo, and like the Yucatan, And so in order to encourage non-Mexicans to purchase these nice villas in, Cabo San Lucas, they kind of created this little loophole arrangement where a Mexican bank holds the legal title to the house and names the U.S. person who wants to own the house as the beneficiary. And so, back, in the 2012 and, previous to that, there were a bunch of people freaking out. I know the first time I saw one of these things, I kind of freaked out because my client had one, and I was like, oh my gosh, this is a foreign trust, and I've got to do all the reporting, and there's all these penalties, blah, blah, blah. But when I dug down into it, I was like, well, this is not a trust, because actually the bank trustee, quote unquote, is just sitting there as like a figurehead doing whatever the heck the beneficiary wants it to do. Really it's just an agent. I was like, this is really just an agency relationship. And so I had enough clients who were upset about it and wanted to hear something from the IRS that, I ended up getting a private letter ruling in favor of my client, where the IRS found that looking at the substance of the arrangement, not a trust in that situation, but rather that fideicomiso is merely the U.S. person's nominee. Therefore, no trust reporting. It's basically a tax nothing. So you can get, and the IRS turned it into a revenue ruling, which is cited right there. You can go look at it. If your client's fideicomiso meets all of the facts in that revenue ruling, then you can rely on it. So, Milan, did you want to talk about Anstalts and Stiftungen?
Sure. And by the way, Amy, thank you for that great work on getting that revenue ruling, which did settle a lot of uncertainty. Although me being more on the reporting side, I wasn't so happy with the ruling.
Yeah, you were probably one of the people that was hating me, because so a lot of the CPAs are like turning out that cottage fear-mongering business. Yeah. But we'll talk about that later.
Well, I wasn't fear-mongering, but I think what the big point here is, there is, particularly when it comes to non-U.S. arrangements, there's a lot of uncertainty, and we have to try to figure out what it is. Thankfully for Amy, she resolved it, at least when it comes to the Mexican land trust. So you can all thank her for making your lives easier. She owes me a dinner because she took some money off the table for me. Yeah. Anyway.
I'll get you Chick-fil-A.
Yeah. The two, since I was based in Switzerland for many years, I came, and I was heavily involved in the voluntary disclosures. There are two things that I came across that were helpful. One was this chief counsel memorandum. In the voluntary disclosures, involved with that were a lot of Liechtenstein Anstalts and Stiftungen, and I apologize to anyone who speaks German if I've slaughtered that. But that's as good as it gets from me. Anyway, that again, the issue here is, what box do you put this in for U.S. tax purposes? And people were going in different ways. And is it a business trust? Is it not a trust? And thankfully, chief counsel came out with this memorandum that said I like it because actually what it basically says is that in general, if it's a Stiftung, it'll be a trust, but if it's a Anstalt, then it's a business entity. But it could change subject to the facts and circumstances. So basically, it's like, whatever you decide. but it gives us some guidance, right? Moving to the classification of usufructs, which are pretty common in Europe and I think in Latin America too, Amy, right?
Yeah.
I think that, yeah. Here's the thing about that. There's far less guidance on the usufruct arrangement. It looks to the economic substance of the transaction, which is sort of fact and different way of saying facts and circumstances. Looking, what is really happening here. And I think one of the things that I personally like in this world of international taxation is when there isn't guidance, well, you can kind of interpret things maybe the way you want as long as you're not going too far. And it actually, while some people like certainty, I like the uncertainty because it allows flexibility. Amy, I don't know how you feel about that.
Yeah, I always do way better on the essay exams than the multiple choice. Let's just say that.
Yeah, it's just, so while there's uncertainty, it gives opportunity. The one thing I would just mention with usufructs, though, while they're generally classified for U.S. tax purposes as a life estate, so which means it's not a trust in general, there are potential U.S. gift tax reporting issues, but I won't get ahead of ourselves. That's for webinar 3, so there's something for you to stay tuned to. Okay, so back to you, Amy.
Back to me. Okay, so all right, so let's say we've decided that based on the substance of the arrangement that we've got a trust. So the next level is, okay, well, do we have a foreign trust or a domestic trust? i.e., do we have a non-U.S. trust or a U.S. trust? So that is important because, the next level of, analysis flows from that. So, there's the tax treatment, there's what kind of reporting requirements, who's going to pay the tax on the trust income, all that kind of stuff. So, so fortunately, the Internal Revenue Code and regs have given us a pretty bright line test for determining foreign or domestic. And I will say, as we go through these, you'll see that they're biased towards actually causing a trust to be foreign as opposed to domestic. So there are 2 tests that you apply, and you have to pass them both in order for it to be a U.S. trust. So the court test, control test. And
I'm going to that.
I think next, yeah. All right, so I'm gonna keep talking because I know we're trying to get out of here around 3:30. Okay.
There we go.
So the court test, this one is so to kind of reflect upon Milan's desire for uncertainty and thereby creativity. The court test, maybe gives you a little bit more creativity, I think, because it's not nearly as clear as the control test. So court test basically says that a U.S. court must have primary supervision over trust administration, over the administration of the trust. This does not mean that a foreign court can't also have administration. It's just that we have to say that a U.S. court has primary supervision. There is a safe harbor set of rules that allow you to pass the court test, is that there's no requirement for administration outside the U.S. And a lot of times asset protection trusts will kind of prohibit, will kind of cause to fail the court test because there are certain things, basically, a lot of times they'll put this like flee clause in there that says, okay, well, it's a Texas trust, but if some sort of poop hits the fan, then it's gonna migrate off to Liechtenstein. You know, we can't have that. So if there's no flee clause, and if the actually it's administered exclusive in the U.S. and that we're not like requiring it to be administered outside the U.S., then we good on the court test. Do you want to say anything
No,
about that?
Nothing further to say. Like you said, it's pretty straightforward.
Okay. Control test. All right. So this one is, yeah, you can accidentally fall afoul of this one if you're trying to be domestic. So the control test says that all substantial decisions must be controlled by U.S. persons. In other words, like no non-U.S. person can control any single substantial decision of the trust. And this control also includes veto powers. So if the U.S. trustee has all the control over the decisions, but a foreign person can, veto those decisions, you failed the control test. The regs set forth a non-exclusive list of substantial decisions, and we've listed a few of them here. I mean, they're pretty, intuitive, I would say. Distributions, changing beneficiaries, when terminate the trust, removing and appointing trustees, how to allocate the trust investments.
Yeah.
So
on this one, Amy, I would like to just share that as you pointed out, this is where I think I've seen trust companies fall into problems, particularly where in the U.S., U.S. trust companies, where they're thinking they have a domestic U.S. trust, and unbeknownst to them, they've given one of these substantial decision control issues to a non-U.S. person, and inadvertently they've fallen into a foreign trust, not a domestic trust, which is a whole different set of rules, reporting. And so this is where I'll make a plug that don't do this kids, don't do this at home by yourself. It's really in your best interest to get some advice up front, because one, you can avoid unintentionally falling into the wrong box, and two, we can help you get into the right box if that's not the box you want to be in. So that's just a little plug for getting advanced planning as opposed to fixing problems after they've happened.
Right. Okay. And my brain is going off onto all sorts of like creative things that you can do in playing with the control test. You can have a trust that's, foreign for all purposes and other than tax, so there's like specific drafting and administrative guidelines that we can put in place where you can still have a foreign trust, but make it taxed as a U.S. trust and vice versa. So, so let's move along to, now, what if we have a foreign trust? Now we got to figure out, is it a grantor trust or is it a non-grantor trust? So whatever level of analysis we're at now, like 3, level 3, 2 or 3 or 4. Why it matters is because depending on the classification, who's going to pay tax on the trust income? What types of reporting needs to happen? So let's talk about the first one. Grantor trust. So here's some terms. So a grantor trust is one where, someone is treated as the owner of the trust assets for U.S. tax purposes. So if it's, I guess maybe what's the next slide say? Because I think
that's specific to U.S. grantor.
Yeah. So, so is it a grantor or non-grantor? The rules are different for when you've got a U.S. grantor or a non-U.S. grantor. So I
just want to say one thing there, Amy, sorry to jump in. When we used in American English, when we use the word grantor, it's basically synonymous with settlor.
Yes.
In the non-U.S. jurisdictions.
Yeah, so it's important. It's important to also know that grantor is a term in the Internal Revenue Code, meaning like someone who transferred assets to the trust, but the grantor may not be treated as the owner of the trust, may or may not. To make it even more confusing is that something is called a grantor trust only if it has an owner. So I don't know why they don't call it an owner trust. It really should be called an owner trust because, you know, it's confusing. But I think lawyers write these laws and we like to bill by the hour. So, you know,
Yeah.
there's probably some grand conspiracy there.
It's for your pension retirement fund. That's
Like,
why you did.
we like to make it confusing. So, all right. So in order for a U.S. settlor / grantor to be treated as the owner of a trust, there's kind of two separate set of rules. So if the U.S. grantor creates a foreign trust, then yeah, it's fairly easy. It's like basically automatically it's a grantor trust as to that U.S. person. You know, you can kind of get out of it a little bit but in ways that no U.S. person really wants to get out of it. So that, you know, you can pretty much count 9.999 times out of 10. If you got a U.S. person who created a non-U.S. trust, it's going to be a grantor trust under 679. So it applies when the U.S. grantor transfers property to a foreign trust that could potentially ever possibly have a U.S. beneficiary. They don't have to retain any weird controls or powers or anything over the trust. It just happens. So a U.S. grantor can also have those weird powers. Sorry, would I speak over you?
Yeah, no. I was just gonna say, in the interest of time, I'm gonna.
Yeah, okay. I'm gonna blow through fast. I can talk on each of these slides. Okay, so we're moving on to non-U.S. grantor.
Non-U.S. grantor.
Okay. So just keep it in mind, if you got a U.S. grantor, then if it's a foreign trust, it's pretty much going to be a grantor trust as that U.S. person.
I don't know how you feel about this. What if I go to, because we've got 3 minutes, what if I go to the final slide and you do the summary?
Oh, God, don't do that to me. I totally didn't prepare. Okay. Let me see here. Foreign grantor. Okay, non-U.S. grantor. Let's just flip through it real quick. I'll make you do the summary while we do the Q&A. Yeah, so non-grantors typically not allowed to be owners because that's a tax avoidance opportunity. So let's just say that. But there are some exceptions we can fit into. And this is why we have slides. So you can go back and look at them. What should I say about this? Yeah, so if it's a foreign non-grantor trust, and I think that's where we're going to dig deep on the next two.
Next one, yeah.
Yeah, so we're gonna get more into this, but a foreign non-grantor trust is treated like a separate taxpayer, and sometimes, you know, with respect to retained income, sometimes that's a pass-through. One thing to remember is that there's this like cool thing called the throwback tax rules that apply to distributions to U.S. beneficiaries of foreign non-grantor trusts.
We'll get into that. That's
yeah.
Fun.
Yeah. It's nothing to be afraid of. It's just a thing,
it's
you know?
Yeah.
Okay. So I'm going to skip simple versus complex.
I think just there, what we would say is it doesn't have a lot of relevance other than most foreign trusts are classified as complex, that it's hyper technical. It's really probably should be deleted. But we wanted you to know that you might hear and come across these concepts. So it's not like we didn't know about it, but it's really not that relevant. So one, I don't want you guys to, I know we went through that a little fast and I apologize. But we're going to, as Amy mentioned, we're going to get the next presentation for webinar 2. We're getting into the breakout. So this summary here really breaks out what we went through today. And we're going to get into more detail, particularly on the classification of the foreign. So stepping back from today, what's the first thing we need to figure out when you have a trust? Is it a trust or is it not a trust? We kind of went through that with the Mexican Land Trust, the Liechtenstein, the Stiftungs and Anstalts, and the Usufruct. So that's number one. And we're going to assume for the next one what we're now dealing with, and most times we're dealing with a trust, okay? Then once you know it's a trust, once you know it's a trust, then the next segment is it domestic or foreign, okay? And Amy touched upon those rules. It's the court test or the control test. And if you meet both of those, then it's a domestic trust. Otherwise, it's foreign. That's the uniqueness of the rule. So most, as Amy said earlier, most trusts that you may think of are actually foreign unless you qualify and make it domestic by meeting both the court test and the control test. We'll get into a little more detail on a foreign grantor trust with a U.S. grantor and a foreign grantor trust with a non-U.S. grantor, and then we'll get into a foreign non-grantor trust, not to be afraid of. It's just high level. We're not going to get into the details. So that's for next week when we have the presentation. We are at the half hour, so we're happy to do a Q&A. So Amy and I will stay on for anyone that has questions. I'll look also in the chat. But if you have to go, we understand. I'll just wrap up for those people who have to leave. We'll send out a reminder on Monday for the next webinar, which is going to be Thursday, same time. We'll send the slide presentation. I'm going to send it from my email personally, even though it's going to come through the other email. Please don't call it spam, because then you're going to harm my email reputation. So if you don't like it, just delete it, but don't call it spam. And then so that'll be webinar 2, and then webinar 3 will be the week after. And you'll also get a live recording, as I said, when IT Joe gets back. Joe will share it. I'm not technically able to do so. So we'll stay on for people who have questions. And let me see if there's any in the chat.
I don't see any in the chat.
Okay, I guess, you know what, Amy, we did such a good job.
And also, I think our contact information is there, right? So
correct.
At least I think yours is. No, mine
is
there
right
too.
there. There's Amy's, and ours is there. So if you do have questions, then please let us know. And just to reiterate, webinar 2 will be on Thursday, August 21st, same time. And webinar 3 will be on August 28th at the same time. We look forward to seeing you. Also, I saw some people, one last thing. I saw some people, very few, but a couple people unregistered. If you can't make the event, don't unregister. Just stay on, because then you'll get all the materials and the information. It's not going to affect us in any way. Thank you very much. Thank you, Amy.
All right. That was fast. I've never been through a presentation that fast.
Quick.
We'll see y'all next week.
Bye.